This is Dance Studio 411, where we answer your real-life questions about your toughest studio life predicaments. Parent problems, teacher turnover, student challenges, policy dilemmas, and so much more. Let's talk about what's keeping you awake at night and what you can do about it. Here are your hosts, Suzanne Blake Garrity and Jill Tyrone.
Welcome to this episode of our Dance Studio 411 podcast with our longtime expert, Jessica from Financial Groove. And welcome, Jessica.
Thanks for having me. Happy to share knowledge.
Oh my gosh, you've been such a great resource, not only to me personally, but to our Dance Studio owner members and listeners and community. Gosh, we navigated the sales tax confusion back in the summer, and you've been there to help with everything from cash flow planning to what's tax deductible, fundraising, and suddenly we're faced with a crisis of epic proportions here. And so many of our small businesses, our dance studios are faced with needing economic disaster relief. And so we just appreciate anything you can provide to help us as we navigate, hopefully, funding from this process. So, yeah.
Yeah, absolutely. There's been a lot of rumors and a lot of things that came through officially and changed quickly. So overall, the concepts that we were first working with 3 weeks ago are different now. But based on the timing of when this podcast comes out, we should have additional funding so that our initial plans with the SBA Advance and the SBA EIDL loan, as well as the PPP loans, should be processing again. Depending where you're at in the process, I've been encouraging everyone to just continue forward. It does look like things will continue to be funded in this next wave. So just keep pushing forward, and hopefully the banks will be a little bit more motivated for us little guys based on all the feedback that they've gotten from the first round.
Yeah, it's, and I've shared this with our members and stuff. I mean, same, and I shared that with you. Our studio, we did everything right. We had all the paperwork in on time, and it was a clerical error by the bank's intake that kicked us out, and we didn't know about it till all the money had run out. So, so many of us are at the mercy of the banks that we just didn't think much about until we were in this. And some people say you should go to a small local bank, but then if you withdraw from your bank you do business with, you get kicked out of line. I mean, there's so many unknowns that people have navigated. So I think the first thing is sort of like, what's been the consistency here that you can turn to if there was any solace to offer our listeners?
Well, there's definitely a lot of unknowns, and there's definitely a lot of confusion. And because of the fact that they had commercial banks or, our local banks servicing these loans rather than just the SBA, it did help us that we were able to, access people that we already knew. And it also broadened it so that we could get access to it. Whereas the SBA, being a gigantic government agency, would be much harder for them to process all of these things. So while that did create confusion because each of the different banks is approaching it in a different way, it means that basically we're giving best practices on what information and what documents to have prepared from prior knowledge, from lending relationships that have happened in the past. But you kind of have to be flexible and roll with what they're asking, and just keep pressing forward. At the end of the day, once it's funded, prior to its funding, it's all going to work itself out, but you just kind of got to play by the bank's rules as you go along so that you can get through your particular bank to get to the funds. Because they're trying to protect themselves as well.
Of course they do, and I can imagine the headaches. So I guess really where you have so much expertise on the bookkeeping part of it, the payroll part of it, all the business forms that we all had to generate. Now you're faced with, as being a financial leader in the industry, how do we, once funded, properly track for the forgiveness part of this?
Yeah, absolutely. I have been recommending, because funding has started to come through, hooray. They are doing the forgiveness for the 8 weeks directly following the date that you're funded. So what I've done is put into my calendar in an Excel calculator so that I know I have exactly 8 weeks from this date, so that I know when my expenses need to happen. So that's definitely my first thing, is making sure I have that exact date. So, you know, if it came through today and it's Wednesday, I'm counting 8 Wednesdays from now, and that's when my cutoff's going to be. So for the most part, the forgiveness is based on payroll. And this is something that people may not realize, but it's definitely your payroll check date. So the moment the money is direct deposited into your employees' accounts, not the hours that they worked this week. So it's definitely the moment of pay. So that's something to keep in mind. And we've been telling our clients, need to, you know, adjust your payroll date by, you know, 1 date earlier so that it lands within the proper 8 weeks. Because that 8 weeks is definitely not perfect to you doing your semi-monthly or your biweekly processing like normal. So you may need to adjust that.
That's actually, I have a question about that then. So just to clarify, because I feel like I'm getting my own education in finance through this process. But so one of the dilemmas that we faced as a studio when we heard that this was coming, and we thought, oh, we have our application in on April 3rd and everybody's going to get funded and yay. And suddenly we're at the end of the month and we're like, our teachers are still teaching. They're still Zoom class online. We're having to generate some payroll, and we're like running out of ideas of where to find that money. So what you're saying is, as long you could delay payment to your staff for hours rendered. Is that what I kind of hear you saying?
Technically, well, I wouldn't delay it by a month. It has to be within reason, but shifting it by, you know, a couple days or even a week is likely going to be fine. The scary part about that is you don't know exactly when your loan's going to get funded. And, you know, most likely you're going to find out about it like 2 days prior to. So promising that to teachers and having them just wait is probably not going to make them feel awesome.
Right.
So I don't necessarily recommend it on the front end as much, but there are some options, just kind of skipping to kind of a different program that exists that most people don't realize exists, and we got some guidance on it. It's called the Employer Retention Credit, and basically you would need to do this through your payroll company, but it allows you a credit for paying the taxes in. And what most payroll companies are doing is not pulling the taxes at the time of payroll, and it'll get reconciled out at the end of the quarter when they do your quarterly payroll taxes. So that is an option, and the guidance that recently came out is that you can do that up until the point that you have a PPP loan. Once you have the PPP loan, you cannot double dip and do both. So that can help you stretch until that PPP loan comes through. And so I think that's a good option, although it's like getting into scary payroll tax stuff. So I feel like it's not as readily talked about, because it's definitely something that your payroll company knows how to do, and you're probably not going to be able to calculate on your own with your own.
Well, and that's actually a good tip. So what you're saying is, if you haven't, and I've also been under the assumption that if you do not get the pay, like let's just assume, sadly, if someone does not get the PPP, but they can carry this employer retention credit through for, I think, till the end of the year, can't they?
Yes, I believe it is through the end of the year. I don't have the exact date off the top of my head right now.
Okay.
But yes, if you do not get the PPP loan, you can utilize this employer retention credit. Absolutely.
Okay. So someone, if is listening to this and they have a payroll service, they should be able to contact their payroll service and say, I'd like to take the employer retention credit part. It's not an application.
Correct. It's just an option that you utilize in your payroll system, and whoever completes the quarterly payroll filings, the 941, that's where that's going to happen. Is all that reconciliation will happen on the 941.
Great.
I do believe that your income has to have dropped by a certain percentage to qualify you for the employer retention credit. Not that they're asking people to necessarily prove that, but keep that in mind. They're doing a lot of things on these loans and on these credits where they're saying, you check a box or you sign your name and you certify that this is in fact true. And because they did things so quickly, I have no idea how they will come back and have us prove that. But it could be very similar to tax returns where we're audited after the fact, where they come and just double check on things.
Right.
I don't know that that will actually happen, but we want to keep that in mind.
Good. So then let's assume we get funding and we have these 8 weeks to disperse the funds for forgiveness. So I've seen some information, and it's not from people like yourself, saying, oh, you should definitely go open up a separate bank account. That seems like a lot of work, doesn't it? Or is that the best course of action here?
I'm personally anti-opening up the extra bank account. I've told people that, because some people actually were forced to open up second bank accounts simply because they got their loan through a different lender. And so their loan is actually getting funded through this new bank account.
I see.
If that's the case, it is what it is. But you can transfer that money from that new account into your main business account or your main payroll account. So the reason people are talking about opening up a separate bank account generally is so that you can easily track how you're using the money. But the problem with that is now we know for the forgiveness tracking on the payroll, it's not perfect dollar for dollar. It's actually a calculation. So you could take your money all out of that new bank account for your payroll and think, oh, well, this is all forgiven, and it's actually not. And so I feel is much better to do in some sort of other calculation format. Also, if you have a bookkeeper or an accountant or someone who is entering your payroll and keeping track in a bookkeeping format of your payroll information and your expenses for rent and utilities and things like that, it is absolutely unnecessary to have a separate bank account. The bookkeeping is doing that. That's its job. That's why you have it. These are the times when you can count on that.
This is when all of the bookkeeping service fees and all the accounting really pay off. And I do want you to know how much I appreciate you've been such a flagship of a service. Your brand and who you are and your business has been such a source of support for our listeners and our members. And I know people are going to want to know how to find you after this, but I will let you carry on with, we'll let you, make sure you share how people would reach you. But bookkeeping is, like you said, it tells the story. So if we are getting that money, we're putting it in the bank, and we know we have a tracking system for it, we're already one step ahead. I gotcha. Then what?
Yeah, absolutely. So as far as timing, I'll just speak about timing before I get into numbers a little bit more. But you have the 8 weeks for forgiveness. That's the time period that they're going to look at your actual numbers and what you spent. And then the next day, you're basically into the realm of now I have to file and ask for forgiveness. So you will have to do some sort of paperwork proving how you spent your money. It's probably going to be similar to documents that you submitted when you first started this process. And you will have, most banks are doing a 6-month deferral of payment until you have to start paying the loan back if it's not forgiven. And some banks are doing 12 months. So we're also being told that the lenders, per the regulations, have 60 days in order to process your forgiveness paperwork. So if we say that we're going to have to start paying back in 6 months, 2 months are gone because that was our forgiveness period. I've got only 2 months until the lender has to process that paperwork, or I'm going to have to pay. So we've got 2 months of forgiveness, 2 months to file our paperwork, and 2 months to let the lender process it. So if you wait longer than that, you could still get it forgiven, but you'll have to start paying on the loan most likely before the forgiveness comes back in place, and they'll have to do a bunch of adjusting. So I'm basically recommending to people, as soon as your 8 weeks are up, do your paperwork and put an alert in your calendar at 1
Right.
month from your 8 weeks so that you make sure that the lender starts processing that and gets you your forgiveness. Because you may have to submit additional documents or even do some arguing, as we have seen. So you want to give time for that.
So I guess, and I'm asking you all the questions because it's helpful for my studio too. One of the dilemmas we ran into is that we're starting to push past the time period where I would need to be paying my faculty for this 8 weeks. Like, we're kind of ending the season. So what do I do if this money, the timeliness of this is at a time when they wouldn't be working because it's summer, the break in between summer? What do you do?
Unfortunately, there's not a whole lot you can do other than kind of change your season around, which I think many people are being forced to do anyway. So with knowing that, if you look at, again, these timelines and these dates, and right now, as of today, you still haven't received funding. Right now, 8 weeks out is June 17th. So if your PPP loan is a decently large amount, you may need to make some plans already to ensure that you can still pay your staff through that time period. And maybe you're adjusting some of your programs to push into the summer a little bit. Maybe, unfortunately, I don't know. This is the moment where we have to be a little bit creative because it's terrible timing for you guys.
Right. What is that? You're not an attorney, but you do know about payroll. You really can't pay people in advance, and you really can't ask them, right? Does that seem weird? I mean, as an employer, I don't even know where to go with that. I've never had to ask that before.
Right. Well, it's going to line up with your labor laws in your state, but by and large, it's going to be a matter of they have to provide some sort of service or they need to work some sort of hours. And that is actually part of the forgiveness calculation, is the number of hours they're working. So if you're paying them in advance, they're not going to have any hours worked in the system. But I think it's more about being creative with how you shift around the timing of your operations. So maybe in the past, you had a big banquet or a big appreciation or a brainstorm for getting ready for August. Maybe you get together and all do continuing education together. It's going to be a matter of you're going to need to shift that so that it fits within this program, and also utilize people. We're stuck at home. We've shifted to virtual classes, but there are lots of things to tidy up the house as far as accounting and operations and the guides that we never get around to writing and things like that. So,
I hear what you're saying, like possibly more. Yeah, shifting the operation. I hear what you're saying. Like it's maybe we're not teaching dance classes for all those hours, but we're repainting the studio, we're cleaning up things, we're organizing. Yeah, I gotcha. So to position ourselves for success. And my understanding is it doesn't have to be dollar for the payroll part of this. If you and I were both on the payroll for my studio, if you can't teach as many classes during that 8 week period, you could pay me more as long as the amount comes up to that amount. Is that right? Like individuals don't have to be paid the same exact, right?
Yes, that's correct.
Right.
Yeah.
I should say that in a smarter way. If we have 10 employees on our payroll and the payroll added up to $10,000, but in this next month, 2 of my employees can only work like 3 hours, but you can take on some of their hours, as long as the amount we're quote asking for forgiveness adds up to 10. Is that correct?
That's correct in the first layer of calculation. So you have to cover 75% of your loan amount with payroll costs. Those payroll costs are going to basically include the gross wages, which is everything before you start taking taxes out. But it does not include the employer portion of Social Security and Medicare tax. So that's basically 7.65% on your gross wages. It does include your state and local payroll tax, any health insurance you cover for your employees, and any retirement match that you cover for your employees. So in both of those cases, it's the portion that's coming out of your business's pocket, not the portion necessarily that's coming out of the individual's pocket. So after the qualifying 75%, there's also what's called an FTE, or full-time equivalent, calculation that goes into play. This is the confusing calculation, and I tried to do my a Zoom call with some of my clients to show them how the calculation works. But pretty much what you're talking about is adding up everyone's hours. They cannot go over 40 hours per week. So if you're trying to shift hours to someone else, it doesn't work if they go above 40 hours a week.
Okay, I gotcha.
But you add up all the hours and basically divide it by the number of weeks and divide it by 30 hours per week. And that gives us the full-time equivalent number of employees. And it has to be equal to or greater than what it was basically last year or during the first 2 months of the year. So you actually get an option of how to calculate it. This may be the saving grace for studios.
Okay.
Because the first option for timing is comparing it to February 15th, 2019 through June 30th, 2019. And so most of you, if you finish up your recital at the beginning of June and kind of start transitioning into summer, then that downturn in full-time employee equivalents would show up in those numbers. So that actually could be a saving grace for studios where it's a little bit harder on some of the other businesses. But you can actually choose which time period. And I can share with you the calculation if you want to get that on. It's a little bit hard to speak to the calculation without looking at the number.
Yeah, the numbers, my least favorite thing to do. That's why you're here. That'd be awesome. So, okay, those are helpful. So people listening might say, okay, well now what's the 25% is where it gets confusing, rent, utilities, right? Say more about that.
Yeah. So the remaining 25%, first of all, you can cover 100% on payroll and they're going to be happy with that. So you don't necessarily have to stop at 75%. You can do 100%. You can do 80%, but you must have 75%. And the remaining 25% needs to be used on rent for the studio, not for homes, mortgage interest for the business. So that would be if your studio actually owns the building. Now, most people, I'll point this out, most people who own their buildings usually have it in a separate LLC. That means it's a different business and wouldn't necessarily count. So in that case, hopefully you are paying rent from the studio into the LLC that holds the property. You can also use it on utilities, which is your usual water, electric, gas, so on and so forth. It is somewhat up in the air as to whether or not you can also include phone and internet. I've seen it in some places. It is not specifically listed in the guidance, but I'll tell you this, on a tax return, we basically have guidance that we can include phone and internet into the utilities portion. So based on the fact that that's already in some regulations, I'm going to think that it's going to be okay to include internet and phone into our utilities total.
That makes sense.
So there's one more thing, that's included, and that's actually interest on debt that you incurred before February 15th. So that's going to be a line of credit if you took that out before February 15th. Paying interest on credit cards that you've had long-term debt for will also exist, but remember that it has to be under the business's name.
And how would you make a payment when you call the lender? You say, hey, I just want to make an interest payment. Is that what you say?
No, generally when you make a payment for a line of credit or something like that, they split it up and it shows up on your statement. So they say, $200 goes to principal and $100 goes to interest. And so we would only be able to take that small portion that is interest. That's another example of how it's a little bit too weird to go in and out of a bank account because it's truly a calculation and not dollar for dollar.
So what I hear you saying is you can use 100% of your PPP on payroll.
Yes, absolutely.
Okay. But
you're not, they're giving us that extra 25% as a catch-all to help us out. But if you use more on the payroll, I mean, that is truly the purpose of the loan. They want us to use
to keep
purposes.
Will 100% be forgiven if you can prove it in that 8-week time period for payroll?
Yes, 100% forgiven within that calculation if you can prove it. If it's not forgiven, the portion that is forgivable will in fact be forgiven. So it's not it's not all or nothing. It's not all or nothing.
Right. And of course, I did ask you to come on about the PPP, but in my own learning process, my understanding is if anyone listening to this did get the EIDL grant, you just can't double dip for the purpose, right? Say, well, how can you use those funds? Like, I know a lot of people got the EIDL before they're hearing about their PPP. So what do you not want to do there?
Yeah, absolutely. That is true. You could not double dip on that. Depending on the timing of when you receive the EIDL, if you receive the advance, when you apply for the PPP and when they qualify that, they will actually fold one into the other. So your forgiveness calculation will include your EIDL advance if you received the EIDL advance before the PPP loan. If it goes the other direction, you get your PPP loan first and the EIDL second, then you're going to be submitting proof to the SBA instead of to your bank. And that is true, you could not double dip. So all these items that we're gonna send in for forgiveness to our bank for the PPP loan, we need additional items to qualify us for the forgiveness on the EIDL advance, as far as I know. I will be honest, the EIDL advance forgiveness or the grant of that money is very gray, and when it works the backwards fashion where they're not rolling the EIDL advance into the PPP, I don't know how they're going to do it. And I don't know if they will. I really don't.
So exactly. So I mean, we could talk about this for ages because it's fascinating how we're trying to figure it out as we go. So what are some of like the absolute things that you'd want to keep track of? It's, let's say someone listening to this is like, oh, I've never had a good bookkeeper, or I don't know where to start. Like, what are the documentation things you need to do now as we move forward?
Well, first of all, you're going to have all of your payroll information. So the payroll information and how every single person's check is split out between taxes and their deductions and their total income, their gross wages, but also those hours. So you may or may not have that in the reports that you normally look at. So they are going to be looking at hours to make sure you have that information as well. If someone's on salary, you're going to need to default that to 40 hours. I know in our payroll system, we don't put 40 hours in there. It's just assumed for the week. And so you will need to do that when you're sending that back to the bank. As far as tracking and proving other things, if you do not have formal or you're not using an accounting system or bookkeeping software, I always tell people when they're starting out in small that Excel is your best friend to start out with. It's a good way to organize the information. But more than likely, the bank's going to be looking for some kind of receipt or statement, and they may also be looking at bank statements depending on whether or not you actually have receipts for things. So when you're talking about paying your rent, a receipt is realistically the check being cashed, and then your bank shows you the cash check. So that's what a receipt is for rent. So you're likely going to have to show those records or have them, just the same as you preparing for taxes. All of this is almost exactly the same process as doing a tax return, just in tiny categories and small amounts of time. So you're going to compile that information. You're going to want date and who you paid, the amount, probably what account it came out of, and probably the backup of the statements and receipts as well. I do not know if they will actually look at receipts. Bankers are not auditors, but they have been asking for all kinds of things, including like statements of health insurance and things like that. So, they're doing their best to get all this figured out.
Right. And the forgiveness part is what I know we're striving towards at our own studio. But for some people, it might be too much to solve for the entire forgiveness part. And so you can opt to roll this into a very low interest rate loan, from what I understand, right?
Yes, by default, the portion that is not forgiven becomes a loan. It's a 2-year loan at 1%. And if you get part of it forgiven and the other part becomes a loan, the part that becomes a loan, you want to think about, so that's going to be 1%. It's going to be paid back over 2 years, which is pretty quick. So if it's a large amount, that could end up being a pretty large monthly payment. So that's just something to keep in mind, but it is low interest for 2 years. And, time is flying and going super slow. It's just a matter of planning. But one thing I do want to point out, like I said, most banks are giving us 6 months to a year before we actually have to pay back on it. If that amount is a loan that you will have to pay back, that interest is going to start at the beginning. So you're going to be 6 months into interest calculation on the loan portion once you start paying it potentially. So that's just something to keep in mind there, but you absolutely can pay it back. 1% interest is absolutely unheard of. So even paying the entire amount back is still an amazing capital infusion for you. And the SBA EIDL, which is the other loan, I think most people have gotten the advance, and it seems that the SBA basically used the advance application to kind of qualify people as to whether or not they would move forward for the larger EIDL loan. And the part that's outside of the advance is actually meant to cover lost revenues and how the disaster has affected your business. So the PPP loan is very focused on keep people employed. The EIDL loan is much larger calculation of numbers. What happened to my summer classes? Now I don't have them. That's all lost revenue that I can't count on anymore. How did it affect my recital? Am I losing all of that profit whatsoever? How many drops did I have currently? How many drops will that probably cause because we're not ramping up in the same way come September? And maybe it'll recover by the time you hit January, but it's going to cause a lag most likely. So that's what that loan is set up for, is to really speak to, and they actually encourage you putting together a narrative or stories to speak to how this is affecting your business and get you loan money to get you past way past these 8 weeks, because it's going to affect us for longer than that. And that loan is at 3.75%, and I believe defaults to a 30-year loan. Okay. You can pay it all back at any time. There's no prepayment penalty. So that's something to keep in mind for people who are really seeing that their cash flow is going to be truly affected. I've been encouraging people to move forward with that. And, if the loan is funded, who knows how long it'll take, but we'll say the loan gets funded in July and you already are seeing, oh my gosh, the program I came up with to register people in advance is working, and you don't need it, you can give the money back. You just pay it back. And you're not going to be penalized for that.
So that's a different application than was the immediate $10,000 grant. Is that correct?
It's like the second step in the application is kind of how it works. So that immediate $10,000 grant was, for anyone who did it, very, very, very simple. Basically, here's my total income. And that is the same technically first step in the application for the EIDL, but you just checked an extra box to get that advance, which basically sent your loan application down one road rather than the other road.
And I know some people have been worried, like, oh my gosh, if I applied for both, is that going to hurt my chances to get one over the other or both? I mean, we don't know that for sure. We hear some people getting both, right?
Yeah, I've definitely heard some people getting both. I don't necessarily know that it'll hurt your chances. I actually don't think it will hurt your chances. I think it's really just which system you're going through, and the timing of that is really what it boils down to. And like I said, different banks on the PPP side are qualifying people in different ways, but the banks are ultimately getting their money from the SBA, which is the same place.
The same place.
So at the end of the day, all the money is technically coming from the same qualifying place, but you have to prove it in different ways. And like I just mentioned, the purpose of PPP is to keep people employed. The purpose of the EIDL, Economic Injury Disaster Loan, is to show how this loan, how this disaster has affected you economically, which is a different thing.
Right.
So I wouldn't worry about it at all. You're being affected by both of those aspects.
Exactly. Well, it's good. Well, I love talking to you, Jessica. You're so generous with your time and talent. I know you've been a really bright light for people out on Facebook. How would someone listening to this podcast get in touch with you to learn more and, possibly use your services?
Yeah, absolutely. So we actually launched a financial page for COVID-19, which can be found at financialgroove.com/COVID-19, no dash.
Cool.
So we have that page going. We also have started a group on Facebook where we're trying to answer people's questions about these things in a more public forum. I know that these questions can be sensitive, but we're really just trying to help as many people with the answers as possible. So we're using that Facebook group to do that. And I'm actually not super Facebooky, so I'm not quite sure how you get to that group.
Well,
but
we're gonna link to it in the show notes so that anyone listening here will be able to link to it, because you've been helpful. I'm over there learning as I go, and we'll make sure that we get all of our listeners have a chance to get on your Facebook page, but definitely financialgroove.com/COVID-19. Yeah.
Yeah, absolutely. That's
Good.
where we have our COVID-19 resources. Absolutely. And if you need help with other things, with bookkeeping, with taxes, with payroll, we offer all those services, and we're here for people, all year round. We also have some loan programs that we've launched to help people just completely do their loan applications. So we've put a lot of different options out there to help people through this time as we're all sitting in our houses working remotely like crazy.
Yeah, well, no, it's nice to know that there's people out there like yourself who get it. It's hard. We're artists first. We're not in our element touching tax documentation and papers. So I know I've sounded the alarm of what does this mean many a times. And I just really appreciate you and thanks for being here.
Yeah, thank you. Actually, I did want to quickly point out, which I didn't touch base on, but we work with a lot of individual artists, performance artists, choreographers, individuals on the tax front. So if you've laid off employees, or if you have independent contractors that you're working with who are struggling, also please send them to the Facebook page. We're helping people with the unemployment side and the self-employed side quite a bit. And so we want to be a resource for them as well. And I'm sure that you want to help them and probably don't have answers because they're in a crazy, crazy boat beyond anything we can think of. So
yeah, my husband's an independent contractor, so I know that's a whole other thing. It is true. We have to take care of our independent artists. They are the fire in the arts that we need to keep going. So yeah, this has brought a lot of conversation to those topics, and my heart is in that space because 1099s, they're the workers out there. So thanks for mentioning that for sure. So awesome. Well, thanks a million.
Thank you.
Thanks for listening to this episode of Dance Studio 411. Visit us online at dancestudio411.com for more great resources and to submit a question for a future episode. Our number one goal is to help you build a successful dance studio business and keep your passion for dance alive.